Hello and welcome to AE Accounting Tutorials. We are beginning a new series on control accounts. In this particular video, we'll be looking at the basic concept of control accounts, the structure and format of the two control accounts, and we take a practice question to solve to enhance our understanding on this topic. So if you are new to this channel, I will encourage you to subscribe to this channel, turn on your notification bell so that any moment I upload any new video, you'll get notified on your devices, and also share this video for others to also benefit. Control account is one of the simplest topics in financial accounting. So when we say control account, what does it mean? A control account is an account prepared to show in a summarized form all the individual items that are found or entered in the various personal ledgers. This means that this control account, it is the summary or it is the total of all the individual items that are found in the various personal ledgers. So now let's try to know what the personal ledgers are. Is that okay? Basically, we have three types of ledgers. So with the types of ledgers, let's do this quick recap to get a general knowledge on this topic. So we have what we call sales ledger. We have what we call purchases ledger or purchase ledger. And finally, we have the general ledger. Alright, so these are the three types of ledgers. The general ledger, we are not going to talk about it under the control account. We are not going to control the general ledger. Is that okay? But we will be controlling the sales ledger and then the purchases ledger. These two accounts are the personal ledgers. These two accounts are the personal ledgers. So what I'm saying is that control account, it is an account prepared to show in a summarized form all the individual items that are found in the personal ledgers. And the personal ledgers are the sales ledger and the purchases ledger. So what is then these two ledgers? Sales ledger contains account of debtors. So debtors are credit customers. They are customers that business sold goods to on credit. So all those customers are called debtors, and all the accounts are found in the sales ledger. On the other hand, purchases ledger contains account of creditors. Good. And creditors are suppliers that business made purchases from on credit, and those suppliers are considered as creditors. So all creditors accounts are found in the purchases ledger, whereas all debtors accounts are found in the sales ledger. So if we are controlling these two ledgers, it means that we are controlling all the debtors accounts, and we are also controlling all the creditors accounts. With this explanation, we can conclude that the sales ledger, because we'll be controlling the sales ledger, we call it sales ledger control account. Then we also have purchases ledger control account. Because we are controlling debtors account and creditors account, we can say that this is total debtors control account, because all the debtors. And this one we can also describe it as total creditors control account. So this is the basic concept with regards to this. So basically we have two control accounts. So from this explanation, we can deduce our two control accounts from this. So we have sales ledger control account, and we have purchases ledger control account. Is that okay? And I said because we are controlling in the sales ledger, we have debtors account, and because we are controlling the debtors, we can also call the sales ledger control account as total debtors control account. So we can call this total debtors control account, and we can call it total creditors control account. Is that okay? Good. And one key thing I want you to take note is that when we talk of sales ledger control account, we are not talking about the sales account itself. We are talking about the debtors account. Okay, so anytime we are talking about sales ledger control account, just put it at the back of your mind that it is debtors account. It functions as the debtors account because all debtors accounts are found in the sales ledger. When we are talking about the purchases ledger control account, we are not talking about the purchases account itself. We are talking about all the creditors accounts because creditors accounts are found in the personal ledger. Is this clear? Good. So now let's look at the structure and the format of these two control accounts. Before we even look at the structure and the format of these two control accounts, I want you to understand this. Because we say that the control accounts are accounts that are prepared to show in a summarized form all the individual items that are found in the personal ledgers. Let's try to see how this will appear practically. We have established that the sales ledger contains accounts of debtors or customers. So we may say that debtor A and debtor B accounts can be found in the sales ledger. Is that okay? Good. Debtors has a natural debit balance. So we can say that initially we may have a balance brought forward of, let's say, 200. We may have, let's say, sales, a credit sales of, let's say, 800. Because when there is sales, we credit sales and debit the debtor or the customer. We could have maybe a return invoice of, let's say, 300. We could also have bad debts. We could have bad debts of, let's say, 200. So in this particular account, we could have, let's say we don't have opening balance for this. We could have a credit sales. Cash sales are not entered in the debtors account. So we could have sales, that is credit sales of, let's say, 1,000. Let's say a return invoice of 200. We could have a discount allowed of, let's say, 400. Good. So let's try to balance off these accounts. The total here is 1,000. This must also be 1,000. This is 500. So the balance carried down is 500. The balance brought down is also 500. We have 1,000. We have 1,000. So we have 400 as the balance carried down, and we have balance brought down of 400. And what we are saying is that the control account, it is the summation or a summary of all the individual accounts that are found in the personal ledgers. This particular personal ledger is a sales ledger. So we are saying that the summation of the individual accounts that are found in the sales ledger. Is that okay? So if you want to prepare the sales ledger control account, we could have something like this. Sales ledger control account. You may have a very big account. Good. So what we are saying is that individual debtors accounts are found in the sales ledger. So we come and pick the items one by one and try to add it up. We have balance brought forward here. We don't have balance brought forward here. So when we come to the total debtors account or total debtors control account, that is the sales ledger control account, we may have a balance brought forward of the 200. We have sales 800, we have another sales 1000. So sales will be 1800. The summation, the summary. We have return invoice 300, return invoice 200. So we have returned 200 and 300, so 500. The summation 500. We have bad debt. Bad debt appears in only one of the debtors account, debtor A, so 200. We don't have it here. We have discount allowed, a discount allowed of 400. You could see that when we pick the sales, we added the 2. So if the debtors happens to be 10, we add all the sales in the individual debtors account. Is that okay? Good. So if you try to balance off this account, you could realize that we may have here to be 2000. So the balance carried down here will be 900, and the balance brought down will be 900. Is that okay? You could see that we have a balance brought down of 500. We have a balance brought down of 400. When you add these two, you arrive at the total of 900. So this is how it looks like. And the purchases ledger control account, it is also the same thing. In the purchases ledger, we have individual creditors. So to prepare the purchases ledger control account, we add all the individual creditors account in the purchases ledger and do it this way. So it's very simple. It is about picking the totals. Is that okay? Good. But in a typical control account question, the examiner may give you a list of balances that contains the various items. So it is your job to identify that this item will go to the debit side of sales ledger control account or credit side. Is that okay? Good. So now let's look at the structure and the format of the two control accounts. So this is the sales ledger control account and this is the purchases ledger control account. But one key thing I want you to put at the back of your mind is that when we are talking about sales ledger control account, we are talking about the total debtors account, because debtors accounts are found in the sales ledger. On the other hand, when we are talking about purchases ledger control account, we are talking about total creditors account, because all creditors accounts are found in the purchases ledger. Is that okay? But in solving control account question, there are certain clues that you need to take note of. The first clue is that the way, because this is a total debtors account, the way you treat debtors account, treat sales ledger control account as such. The way you treat creditors account, treat purchases ledger control account. Is that okay? This means that any item or entry that's supposed to be debited to debtors account should be debited to sales ledger control account. Any item that's supposed to be credited to debtors account should be credited to sales ledger control account. The same way, any item that's supposed to be debited to creditors account should be debited to purchases ledger account. And any item that's supposed to be credited to the creditors account should be credited to this account. Is that okay? One thing I want you to also understand is that because this is a total debtors account has a natural debit balances. So their balances increases at the debit side and reduces at the credit side. If that is the case, then any item that increases the debtors balance should be recorded at the debit side of this account. And any item that reduces the debtors balance should be recorded at the credit side of this account. The same way, any items, but you have to understand that for creditors, they have a natural credit balances, creditors. So any item that will increases the creditors balance should be credited to this account. And any item that we intend to reduce the creditors balance should be debited to the purchases ledger account. These are the clue I want you to take note of. Is that okay? Now let's try to look at the items that will be recorded in each side of this account. Is that okay? Good. We know that because this is a total debtors account, debtors has a natural balances. So in a question, you may have an opening balances that will be recorded at the debit side because it has a natural debit balance. So we could have a balance brought forward. We could have a balance brought forward over here, and we could also have a balance brought forward at the credit side. There is a reason for this because debtors don't have a natural credit balance. This could arise for several reasons. One, if the customer has or the debtor has made overpayment to the business. I mentioned the word business because any item that we want to enter into this account, we'll be looking at that item in the perspective of a business. That is, we'll be looking at the double entry in the book of the business and that of the debtors account. The same way, if you want to enter any item over here, you'll be looking at that item in the perspective of a business. But when we begin to pass the entry, you get to understand what I mean. Is that okay? I was saying that the sales ledger control account may also have a credit balance for several reasons because this is not its natural balance. One, when the customer has made overpayment to the business, okay, it means that the customer has paid more than what the customer is owing the business. Because of that, it will experience a credit balance. If the customer owns, let's say, 500, the customer has paid 700, it means there will be a credit balance of 200, extra 200. That is overpayment. Is that okay? And this could be one of the reasons why the sales ledger control account could have a credit balance. Another could be an error. When an error is committed, let's say the debtors account balance has been overcast. In that case, the debtors account could experience a credit balance. So these are some of the reasons. And we are much aware that I want us to be passing the entry simultaneously to enhance our understanding. And we know that for creditors, total creditors account, there has a natural credit balance. So for purchases ledger, we could have a balance brought forward of this. We could also have a balance brought forward in the case as we did to this. Is that okay? Good. Now the next item I would like to look at is sales. Sales is debited to this account. When the item, if you pick one item, ask yourself, what is the double entry? When there is sales, we credit sales, we debit our debtors. This is total debtors account. Is that okay? So when there is sales, we debit this account and credit sales. But take note that the sales I'm talking about here is the credit sales. Cash sales are not recorded in this account because when there is cash sales, the double entry is that we credit sales and debit cash. But for credit sales, we debit debtors and credit sales. So credit sales will be debited to this account. Credit sales will be debited to this account. The opposite of credit sales is credit purchases. Credit purchases will be credited to this account. And there is a reason. So credit purchases. Credit purchases will be credited. A credit purchases is a situation where business has purchased item from its suppliers on credit. Okay, when this happens, we debit our purchases account and then we credit the creditors account because the purchases ledger is a total creditors account. And the credit sales too is when businesses sold an item to its customers on credit basis. Good. One trend I want you to also note is that any item that is recorded at the debit side, the opposite of that item is recorded at the opposite side of the other account. But let's see how it works. The next item I would like to talk about here is returns. Returns. For returns, we have return inwards and return outwards. And return inwards goes to the purchases ledger. Is that okay? For return invoice, it is customers or debtors that return goods to business. So when customers return goods to the business, we credit the debtors account and debit return invoice. So we credit the customer's account, that is the debtors account. So we credit sales ledger in the name of return invoice. Return invoice. Over here. If return invoice is recorded at the credit side of this account, then return outwards will be recorded at the debit side. Return outwards is when businesses return goods to its suppliers or creditors. And when business return goods to creditors, it reduces the creditors balance. So any item that reduces the creditors balance should be debited. So we have return outwards. Good. The next item I would like to talk about is discount. We have discount received and discount allowed. For discount allowed, it goes in the sales ledger. Businesses allowed discount to its customers or debtors. So when business allowed discount to its debtors, it reduces the debtors balance or the customer's balance. And any item that reduces debtors balance should be recorded in this account. Is that okay? So for discount allowed, it will be credited to the sales ledger control account. Is that okay? So we credit this account and debit discount allowed. Is that okay? For discount received, it is the suppliers that gives businesses discount. That is discount received. When it happens this way, the double entry is that we debit the creditor's account, then we credit discount received. Is that okay? So discount received will be found at the debit side of the purchases ledger because it reduces creditors balance. So we have discount received, debit entry. Is this okay? The next thing I would like to talk about is bad debt. Bad debt. Bad debt, it is an amount of money that a business think its customer or debtor will not be able to pay. So if an amount is considered to be bad and it is written off and debtors will not be able to pay, then it reduces the debtors balance. So the double entry is that we credit debtors account and debit bad debt. So bad debt is credited to sales ledger control account. So bad debt. But the bad debt should be the bad debt written off. So bad debt written off. And bad debt may occur because of several reasons. Maybe the customer is dead or the customer cannot be traced. So the business will consider such an amount as debt and it reduces the debtors balance. Good. Sometimes when businesses write off debt, there is a time that the customer or the debtor will come back and say, oh, now I'll be able to pay the debt. When that happens, we call that a bad debt recovered. So if the bad debt is recovered, this bad debt written off, if it is recovered, then we have to reinstate the debt. Reinstating the debt means we have to increase the debtors balance. And any item that increases the debtors balance should be debited to this account. So we have bad debt recovered. Bad debts will not appear in the purchases ledger control account because if you do that or you do this, then it means we are violating an accounting principles. Because we business cannot say, oh, we will not be able to pay this amount, so let's go and reduce our balance at the creditors account. No, we don't do it that way. The next item I would like to talk about is check or cash received from customers. Customers may pay their debt through cash or check. So I will say that check or cash received from debtors or customers. And when customers made payment to the business, it reduces the customer's balance or the debtor's balance. Because of this, it's supposed to be recorded at the credit side. Is that okay? When payments are made by the debtors, it reduces their balance, so we record at the credit side. Is that okay? Good. The same way, we as a business can also make cash or check payments to our creditors. When this happens, when we make payment to them, their balance will be reduced. The amount of money we, the business, own the creditors will reduce. And any item that reduces the creditors' balance should be recorded at the debit side of the purchases ledger control account. So I will say that a check or cash paid to creditors, it will be debited. There will be a sometimes when customers paid check to businesses to reduce their balance because of certain reasons, that check could be dishonored. If the check is dishonored by the bank, then the check of the same amount should be reinstated to increase the debt again. We call that a dishonored check. So if there is a dishonored check, then it should be debited. The cash received from the debtor, sometimes the business will get to know that that amount is not supposed to be paid by that particular debtor. When that happens, then the business needs to do a refund to that particular debtor. When the refund is done by the business, a refund of cash will increase the debtor's balance, so it will be recorded at the debit side of the sales ledger control account. So anytime there is a cash refund, so I'll say cash refund to debtors will be debited to the sales ledger control account. Is that okay? Good. The reason why a dishonored check may not appear in the creditors ledger is that any moment businesses prepared check for payment, businesses assume that the check has no problem, the check is correct. So in most circumstances, check paid to creditors are not dishonored. But if it is dishonored, it will appear at the credit side. But in most cases, you will not see it that way. But note, with the cash paid or with the cash payment to creditors, when the creditor gets to know that the amount of money paid to him as a creditor is not supposed to be paid, then the creditor needs to make a refund of the payments to the business. So a refund of money to the business increases the creditor's balance to reinstate the debts. So cash refund. So cash refund from creditors. This is creditors. A cash refund from creditors should be credited. As far as payment is concerned, debtors may use bill of exchange to make payment to clear their debts. Okay, so when customers or debtors use bill of exchange to make payment to business, we call that bill receivable. Is that okay? So bill receivable reduces the debt of the customer or of the debtor. I said this sales ledger represent the total debtors account. That is why I'm using debtors. So I will say that bill receivable from debtors. The DR means debtors. Is that okay? Bill receivable from debtors. But sometimes let's pass this entry over here. If bill receivable is at the credit side of sales ledger control account, then there could be a bill payable where business will use a bill of exchange to make payment to their creditors. So bill payable will be recorded at the debit side to reduce the purchases ledger control account. So we could have bill payable to creditors. So bill payable will be recorded to the purchases ledger control account at the debit side. Sometimes the bill of exchange could be dishonored as well. So a bill receivable from debtors could be dishonored for several reasons. So if it is dishonored, then it should be recorded at the opposite side to reinstate the debt, because a bill receivable dishonored increases the debtor's balance. So we could have dishonored a dishonored bill receivable from debtors. It should be debited. Is that okay? So cash refund to debtors. I did not write this. Let me bring it. Is that okay? Good. A cash refund to debtors should be debited. Good. The same way, the bill payable could be also dishonored. So if a bill payable is dishonored, it should be recorded at the credit side. Is that okay? So bill payable dishonored. Dishonored. To reinstate the debt on the creditor's account. The next item I would like to talk about, very important, is set off. We have something we call set off. Sometimes a particular debtor could be a supplier to a business. For instance, a debtor owns a business, an amount of 1,000 cedis, and the business also owns that particular debtor 1,200 Ghana cedis. It may be that this debtor buy some items from the business, and this same debtor supply some products to the business, so they are all owing each other. So an agreement could be made between them that we should use the 1,000 cedis to make a set off to pay each other, to cancel off. Then the remaining 200 will be an amount of money that the business still owe the debtor as a supplier. Is that okay? So the 100 cedis is setting off, is reducing the balance of both of them. Is that okay? So for set off, it reduces the amount of money debtors own, and any item that reduces the debtors balance should be recorded at the credit side of the sales ledger control account. So we could have set off. We could have set off at the credit side of sales ledger. It should appear at the debit side of purchases ledger. So we could have set off, because it reduces the balance of the creditor's account. Good. The next item I would like to talk about is interest on debtors overdue account. Is that okay? Sometimes there could be an agreed time that a particular debtor need to pay its debt to the business. So if the time elapses, okay, the subsequent period, there could be an interest charged on the amount he owns. Okay, so that interest is what we call interest on debtors overdue account, and the interest charged on the overdue account will increase the debtors balance. So it should be recorded at the debit side of sales ledger control account. So we will say that interest on debtors overdue account should be debited. Is this clear? And we have something we call noting charges. Noting charges. Sometimes businesses will note their suppliers or creditors ahead of time that they should reserve them with a particular product because of the limitedness of that particular product. Okay, so when they note their suppliers in time, when the product arrives at the premises or arrive at the premises of the creditor, they will reserve the product for the business. So if the business did not go for the agreed time to take the product, it means the business has locked up the capital of the creditor. And because of that locked up capital, there could be an interest, or there could be a charge on the notes that the business has made, and we call that a noting charges. And that amount will increase the creditor's balance. Is that okay? So noting charges will be recorded at the credit side of the purchases ledger control account. So noting charges at the credit side. Another item I would like to talk about is errors. Errors may appear in each side of the two accounts. Okay, so you could have errors corrected at the debit side. This means that there could be maybe an undercast of the sales ledger control account or an undercast of a debtors balance. An undercast of a debtors balance reduces the debtors balance. Is that okay? So when that error is corrected, the correction will increase the debtors balance back. So the corrected error should be recorded here. On the other hand, there could be that the debtors account had been overcast. It has a natural debit balance. It has been overcast. So if the error is corrected, it needs to reduce the debtors balance. So any item that reduces the debtors balance is recorded at the credit side. So an overcast of an error will be recorded at the credit side of this account. So we could have error corrected as well. Errors corrected at the credit side. So we could have errors over here as well. Errors corrected. The purchases or the creditors account, there could be an overcast. So if it is overcast, it has a natural credit balance. If it is overcast and it is corrected, then it should be recorded at the debit side to reduce that. Is that okay? So the same way, there could be an error corrected at the credit side as well. So with the knowledge from the correction of errors and the double entry principles, any error corrected, you should be able to identify the side of the account that the error need to be affected. Is that okay? Good. After looking at this, the next thing very important to look at is transfers. This transfers normally confuses students. Good. So let's look at transfers. Because it's very necessary, let me bring it this way. Transfers. And the transfers to appear on both sides of the two accounts. So we have transfers Good. Listen and listen carefully. In a complete control account question, you could have a debit balance of an amount of 500 transferred from the sales ledger to the purchases ledger. To transfer the debit balance, it will be recorded at the debit side of the purchases ledger. The reason is that, for instance, there is a debit balance of 500 in the sales ledger we are transferring. We need to record at the opposite side, the credit side, to write off this 500, to transfer this 500, or to cancel this 500. Then we made the right entry in the purchase ledger by debiting, because every credit entry should have a corresponding debit. So what I'm saying is that if the question says that a debit balance in the sales ledger transferred to the purchases ledger, then you should come and say that a debit balance, we are transferring the debit balance to purchases ledger. We come and record it here. So when we come to the debit side of this account, then we say that a debit balance from the sales ledger. Then we come and record it here. So a debit balance from sales ledger will be recorded at the debit side of the purchases ledger. You could also have a credit balance of the sales ledger transferred to purchases ledger. If it is a credit balance, it will be recorded at the credit side. The reason is a credit balance transferred to a purchases ledger, a credit balance of the sales ledger. So if it is a credit balance, we need to come and record it at the debit side to write off the credit balance, and then before we transfer. So a credit balance transferred to purchases ledger. So we come to, because it is a debit entry in the sales ledger, we come to the credit side and say that credit balance transferred from the sales ledger. Then we record that. Is this clear? Then there could be a transfer from the purchases ledger to the sales ledger as well. You could have a debit balance transferred from the purchases ledger to the sales ledger. So if it is a debit balance, we record it here to make this, to write the balance off before we transfer. So if it is a debit balance, we say that debit balance to the sales ledger. We come and record. Then we come to the debit side. We are making the transfers because it is a debit balance from purchases ledger transferred to the sales ledger. So because it is a debit balance, we credited it to write it off. Then we come and say that debit balance from the purchases ledger. It is from the purchases ledger. We record. There could also be that there is a credit balance transferred from purchases ledger to the sales ledger. If it is a credit balance, we record at the debit side to write off this and then transfer it to the sales ledger. So if it is a credit balance, then we come and say that credit balance to sales ledger is here. So we are making a debit entry. We come to the credit side over here and say that credit balance from the purchases ledger, and it's here. Do you understand this? This is how we do the transfers. You can watch this over and over again and try to enhance your understanding on it. The last thing to talk about is how to balance off the two control accounts. Is that okay? In balancing off this control account, there is a difference between the opening balances and the closing balances. So listen and listen carefully. Listen and listen carefully. I want to take you through how the control account is balanced. The question will tell you that sales ledger debit closing balance, let's say 500. A sales ledger debit balance 500 closing. If it is closing, then it means they are talking about the balance brought down. If it is closing balance, sometimes they will not tell you it is a closing balance, but the date will tell you. In accounting, the date is very important. It could be at the end of a particular year. So if they say that a debit balance, a debit closing balance of sales ledger, then if it is a debit balance, first of all, you need to record it at the credit side as a balance carried down. Then the brought down will be at the debit side because they are talking about the brought down, the closing balance. So you come and record it here as balance because it is debit. It should be debit balance brought down. Then the same amount will be the carry down here at the credit side because if you don't have carry down, you will not have a brought down. So if they say that a sales ledger debit balance, it should be recorded first at the credit side as balance carried down before the brought down at the debit side. They could also tell you that a sales ledger credit closing balance, a credit closing balance, there should be a balance carried down of that amount before the balance they are talking about as credits. That will be the balance brought down. Balance brought down. Then we close it. Okay, let's close the purchases ledger. The question could tell you that purchases ledger closing debit balance. If it is closing debit balance, don't come and record it here as CD. No, record it at the very bottom as brought down because they are talking about closing balance. Then this amount should be recorded at the opposite side as at the credit side. That is a balance carried down of the amount they are talking about. They could also tell you that a purchases ledger credit closing balance, a credit closing balance. So if it is credit, then you say that, oh, balance brought down of the amount they are talking about. But remember, this closing credit balance should appear at the debit side as a balance carried down this way. And this is how we close a control account. But there could be other items that I did not record in these two accounts. But then with the knowledge you've gotten from this and the double entry principle, you should be able to know where an item should be recorded. Is that okay? So in our next video, we will take a full practice question where we try to solve together to enhance our understanding on how to pass the entry. Is that okay? So if you are new to this channel, I will encourage you to subscribe to this channel, turn on your notification bell so that any moment I upload any new video, you'll get notified on your devices. And also share this video for others to also benefit. Until we meet in our next video, I think it is bye for now.